familiar with Zoom. I know a lot of us have become very familiar with shelter in place, but want to make sure everyone's familiar with the functionality. So we are in a webinar base, so we won't be able to see you, but as you can tell, you can see us as your panelists. And I would like you to engage with us and let us know how you like this format. We did a class the end of April where we were doing the Zoom meeting where I could see all these wonderful faces. So we would like to know as we move forward, do you prefer to see the faces or are you okay with just seeing the panelists? Because we do want to stay as engaged as possible. This is going to be a recorded session, so you will be able to go to our website probably early next week under events and past events, get the recording if you want to listen or share the information. We will be having a session at the end of the presentations for a question and answer. So you see in the bottom, you either have your dialogue bubbles that say Q&A, or I see people that are actually using the chat function as well. So either way, we'll be able to manage questions and answers. We do have everyone on mute just to help with any distractions. The folks that have called by phone, unfortunately, won't be able to interact in the question and answer series, but you will have access to us and the presenters. So if you do have a burning question, we can get to it, but maybe not this evening. What else do I want to share about this? I think that is it. So without further ado, I want to welcome you to Richmond Neighborhood Housing Services Money Matters series. We have, for the month of May, have concentrated all of our education on the impact of financial services and the things that we promote best as it relates to COVID-19. In today's session, we're going to be talking to our fabulous partners who work with us pretty consistently as we get homeowners into homes to talk about how the industry is changing, what they see in their environment, new underwriting practices related to COVID, but also keeping people encouraged that there still is a way, because our tagline is we change the narrative of home ownership. So even through this quote unquote crisis, there is a way, but we wanted to make sure people were educated. So I would like to introduce Simone Gorey, who's our property and finance manager, who's going to be kind of navigating us through this process and helping us facilitate the questions and answers. We have Tisha Hernandez, our administrative assistant, that you don't see, but she is always working in the background, keeping all of what we do in order. So she may be responding to you via the chat function if you have questions. During this time, we will ask that you complete a survey, because whether we're in person or remote, we always like to know what's working well, things that we might be able to do differently. And then the materials that will be shared this afternoon can also be sent to you via a link on the chat function. So we have some extraordinary people that have helped many of our homeowners get into homes. We have Emma Biggie, who is Vice President with Bank of the West and its lending services. We have Susanna Hart, who is a mortgage officer with Guild Mortgage. And then we have Nikki Duisberg, who works with the City of Oakland under their home ownership program specific to down payment assistance. So I had asked these panelists, because I wanted to get an average of the number of years of talent and industry knowledge that we had in front of us. And I'm going to say we have about 100 years, more or less, if you look at us collectively as we've been doing the work. And I have to say, I'm always very sensitive to who we put in front of our clients, because we understand being a first-time homebuyer, it takes a lot. And we need people dedicated. And I have to say, each one of these individuals have worked some magic, have done some things that I didn't think was possible in being an advocate and working diligently to get our clients into homes. So I think they're going to be one of the best folks to be able to share what's going on in the industry and how we get started. So I want to kick it off to Emma. Simone, if you can get her presentation ready. to talk to us about what Bank of the West is doing. As I said, things that you're seeing that we might need to address as first-time home buyers, and any insight that you have related to what COVID-19 may be doing different, having the industry work differently in.
Hi, good afternoon, everybody. My name is Emma Biggie. I work for Bank of the West. Before I start my session, I want to put a disclaimer here that a lot of information I talk about is actually of the banking industry in general right now under this very special period. A certain situation or case scenario, each bank or financial institution may have a certain way to treat it, but that's very specific. Overall, we're all in the ballpark. So as everybody, we're in this together. We're in the shelter in place for a while. Hope it will end soon and our life will return to where we were. Everybody be safe and out there. Be well. So pandemic changed the world. It changed our life, work, and our environment. It is a very unusual time right now. But there's a big but here. Our dream of shelter/home continues. Actually, I would say at this moment of that, a lot of that desire is even stronger because the happiness is rooted from a home where the asset is accumulated, the joy shared, a legacy carried on. So after this difficult period, we may have to adjust the way we do things, but the fundamentals are intact. So let's see, is the slides is there, right? Simone? Oh, I cannot hear.
Yeah.
Okay, so when you see the slides, you will see now, we'll pursue the dream, but how about the business? What we're seeing is at this moment is a very, very unusual time, but the business is really as usual. They are there. We don't close doors. We keep doing what we're doing. Of course, because temporarily sustained, put everybody say, hey, you stay put, not go out, but doesn't mean we are closed the doors. So the business is still there. But there are some things we got to look at it is external and internal, and some changes, some new ways is out there, and that's what we are talking about. So talking about external, out of you and your family, beyond your control, that's external. Right now, after this period, or in this period, this external element asks us or forced us to adapt. A full adaptation of technology can offer. Now we're here as a virtual meeting. Why? Because this is set up a new norm and a reality, specifically talking about the banking. I don't see, our faces because it's not a interactive setting, but I want to put this out there is anybody in this room, have you signed up online banking? Have you recently doing the online transaction? If you don't or haven't done that yet, why not? Because after this, I can guarantee you the online transaction is become very, very popular. And this is later on, I'm talking about the industry change specifically. That's already is changing. Now, talking about internally, that's internally refer two sides. First is customer internal. This is the part is from the banking, from the lending institution, overall financial system. We're looking at the customer internal. What we're looking at it is you and your family what do you feel the most? The feel the most is financial difficulty, the pinch, the emergency, how to resolve this. This is going to take us back to one of the financial basics, saving. Saving help us to overcome the hurdle of a financial difficulty. Saving lead us to settle the house down payment investment and also ease our paying of life in emergencies. So I would say is before you haven't done that, or you haven't picked up this habit yet, now it's the time to start saving, because saving will save us, everybody, in good and bad time. The other basic needs need our attention is credit. That's also the financial institution is looking at, especially for the difficulty time. Everybody will thinking, oh, because I have the financial difficulty, I may stop doing things. I may stop paying bills, pay the rent, or something like that. Do we really need to do that? Think about it, think twice, because credit is our financial ID, is our reputation. We need a well-guarded, and that will help us, because right now the difficult time is temporary. For long run, we do need to think of ways to managing it. So that's something as lending, as banking side, financial institution, we still pay very close attention to the customer, to the public's credit. So that's something I want everybody take away is even this difficult time, we still keep our basic in mind, in our head to see what we should do and to maintain that. If you have some of those questions, about the saving, about how to manage the credit, or credit have some issues, or considering going to have issues, I would highly suggest to talk to Richmond Housing, the Nikki, May, and Tisha, all these people we can help, and us we can help. And I want to mention specific thing. Did you know bank has a specific product can help you build your credit? That's called a secured credit card. And that card itself, to start it, is very low limit as a $300. But within 6 to 9 months, the bank is specifically help you to build your credit. And with that said, I would ask everybody, if you haven't, think about that and talk to your bank and to try to see what that product can do to help me. Now let's talking about industry. The industry update, we are thinking, well, this is the industry, there's some external changes. As I mentioned before, business adapt a new ways to do things. First and foremost, digitized. And you see a lot of activities used to be physical, now it's totally virtual, it's totally online. You will view documentation online. You will view sign the documentation online and authenticate online. It even is house value is online. So those are a lot of things is put using the take advantage of the technology is put online. So that will require us, the public, the consumer, adopt that new norm to learn the technology, to learn to work with the institution, and that will make the transaction is more smooth. Product, I would say big bad news. We have the product we have yesteryear and yesterday and still here today, and more surely guarantee you for tomorrow. And some of those product guidelines, we actually is getting better to make sense for everybody's situation. For example, to recognize more income for home buyers, we start thinking to recognize a steady seasoned job income, household boarding income, multiple units, such as Airbnb type of income, we also account. This is type of income is not only the lender, is the bank is counted, actually is the investor is okay to count it for. Now, talking about 100% financial support, financial finances, VA is a product, everybody knows that. Now this year, VA has a change is 100% finance without a house purchase price limit. Before there was a house purchase limit, but now without that. Now what's the trick for that is there's no limit for the purchasing price, but they solely focus on income qualification. So that's for the VA change. Lender paid mortgage insurance is out there. Since interest rate is very low, you also can do the first mortgage plus purchase home equity line. And after you paid the equity line, the principal back, you can continue to reuse the home equity line, and that will help you to manage the household finance. 2020, the conforming loan again changed to, raised up to $510,400 per unit for one unit. And the least down payment community program for first-time home buyers is 3%. For first-time home buyer, there's tons of the programs, the community programs help you to get your down payment, such as, I name a few, such as a WISH program for Alameda County, Contra Costa, Solona County, City of Oakland. Nikki is going to talk about that in detail. State has the Cal Health program, has a first and second, that's probably can give you even 100% financing. So, and also there's some grant, lift programs, all those can help for you to invest to become a homeowner. Now back to the pandemic, there are some seasonal changes currently going on. We are sure this is a very, we call it seasonal, because this is only coping with the difficult time. The first one we're talking about is a reduced credit. This reduced credit goes two ways. First is cutting down the accounts. So what the cutting down counts is banks are issued the credit is considered not issue too many credit cards. So that's one is cutting down the counts. The second one is raise the lending par requirement for credit. So normally within the last 3 weeks, majority of the lenders already had adjusted their credit from 620 to 640 to 660. So this is the part when everybody talking to your lender, the officers, the lending officers, and be careful with that and ask for, the specific, what's the qualification right now, and then the loan officer will explain the detail. The other seasonal changing is large size loans, quote unquote, we're talking about the jumbo loans, which is not conforming loans, at this moment are pretty much generated on the bank side. The smaller lenders and the broker side are withholding from that market because the risk. So in the future, what are we going to foresee is going to coming back? Everybody is going to, that's will, wait and see situation, but currently is trending like that way. So, and also we talk about the VA loans. VA loan currently under the difficult time, the appraisal, they actually can be desk review only. Oh, so that's actually is a good change. So with all this, what I want to say here is if you determined to make your dream come true, to become homeowner, to become asset holder, surely the help is there for you. Now, talking about the services, I want to say a few words about the banking services. I want to say is, please use the services the bank provide and build relationship. This is very, very important. Before, we didn't see this clearly, but through this pandemic, we realize how important that relationship is. I want to share the story. A lot of people probably already know this. When the pandemic hit, small business people lost the jobs, because they got to close the door. So they wait for the Fed rescue fund to maintain the integrity. So SBA program distributed the fund through the bank channel. The bank, all the banks picked up the first batch of application is from the bank own customers. The reason is the bank has a judiciary responsibility to our customer, and we care about our relationship with our customers. So in that one sentence, I will say, we're here for you. So let's say, in summary, what I want to press out to you, or no matter it's a pandemic, fire, earthquake, whatever, you name it, difficulty, or the bad things through to us, life is still going on. So please do not be afraid to dream big. Let us be in your dream together. The last slides I was showing, in this area, if you want to get in contact with us, here is the two person you can reach, me, myself, and also one of my lending officers also working with the Richmond Housing. We're partners. And this is the people we provide help, provide resources, and provide the information you need to help you go through some of what you want to do and the dream, what do you want to achieve. So that's my section. Thank you very much. Nikki, you're mute.
Yes, that little mute microphone. So Simone, if you've had a chance to look at the chat box, there were a couple of questions for Emma. Let me know if you see those. If not, then I can share before we move on to the next presenter.
Yes. So Emma, one question is, can you recap the programs again?
The recap.
For the down payment assistance that you mentioned, can you just?
Okay. For Alameda County, now we work with Richmond Housing. We have Wish, the Lift, and also AC Boost, City of Oakland, City of Vallejo, City of Concord. So that's quite a few.
And if I can just reiterate for that, one of the things that we do at Richmond Neighborhood Housing Services, we have a Lender Ready program. As a HUD-approved counseling agency, typically you would have to come to an agency like ours to get the education certificate to qualify for many of the programs that Emma has mentioned. And after you attend the class, we sit down one-on-one with you to really identify the best programs. As Emma mentioned, through Bank of the West, she has a number of lending programs. You'll hear from Susanna in just a bit. But what our role is to help you identify which institution or lender would be best on your particular need. And we also have quite a bit of information related to the different down payment programs. So if you aren't familiar with what was mentioned, just know that we could talk to you one-on-one and give you explicit information about the programs that were mentioned and talk to you about, and maybe when Nikki comes on, talk about those that are gifts versus those that would be loans, but we would work with you individually on that. Simone, is there another question?
Yes, the last question is, can you explain jumbo loans?
Yes, jumbo loan actually has two meanings here. Jumbo, of course, first it refers to the size. So any loan size above beyond the conforming loan limit, that's called a jumbo loan. The other jumbo meaning is because it's a jumbo loan, is not conforming, somewhat it may not be put into the secondary market for trading purposes between the lenders. So each lender may hold that loan in the lender's portfolio. That's what also the different words name for that is portfolio loan. So those are the jumbo loans. The jumbo loan has a little bit of special guideline because it is not traded on the secondary market, is between the lenders. So the lender can specially package that loan and put some special niche for that loan to serve the certain group of the customer. Nikki, you're muted.
Yes, so I've become quite Zoom savvy, so I never want to have a live mic. So always have me on mute. So thanks for the friendly reminder. So I think we have one more question for Emma before we move on to Suzanne.
Will borrowers whose job goes away as a result of COVID-19 be able to refinance to lower their mortgage payment?
Actually is yes. You can refinance, but we want to see the specific condition. What do you mean the job goes away? Because the job goes away is permanently you lost the job being terminated, or is just a temporarily is a furlough. And if it's a furlough, there's a certain timelines there. So we want to see, are there certain documentation can back it up, and that can be considered, yes. And also, especially talking about the refinance, currently all the banks, because this is from Fannie Mae actually, and Fannie Mac, they are okay to, due to the COVID-19, they are allow the people to do the mortgage forbearance. But be careful to take any action on that. Forbearance is basically is a halt your mortgage payment to the loan. Before you do anything to your mortgage payment, please talk to your lender first, because even Fannie Mae, Fannie Mac, they are allowed the lender to do that, to give the forbearance plan to the customer. But still, the lender has to report the forbearance fully, completely, in detail to the credit bureau. And the credit bureau still make the judgment on that, on the person's credit. So in the future, we don't want to have that severely affected your credit history.
And I think that's also a good point to say how our organization can assist. Again, as a HUD-approved counseling agency, we can work on behalf of borrower as it relates to, foreclosure. If there's mitigation, we are trying to wrap our arms around how we can be involved if you are having challenges related to COVID, but please contact us so we can assist. And to Emma's point, before you do anything, please get counsel so that you are sure that whatever immediate decisions you're making won't impact you in the long run. So with that, we're going to hand it off to Susanna Hart, who's with Guild Mortgage and is considered a direct lender. And Susanna, before you get started in your presentation, if you can just speak to how Guild is different than a Bank of the West or other institutions that people have heard of.
Well, fantastic. Welcome, everyone. Guild, yes, we are a direct lender, so we will lend our own money to finance your loan, and then we do sell it to Fannie, Freddie, or any investor that is behind the loan. Guild also does service a lot of their own loans, even though the note may be owned by Fannie or Freddie, VA, FHA. I am a specialist in down payment assistance and below market units throughout the Bay Area, work with a lot of the institutions that Emma has also mentioned, the AC Boost, City of Oakland M.A.P, the CHDC Cal Home Funds, the Neighborhood Lift, City of Brentwood, Hello Housing, and a lot of their below market units as well. To kind of talk a little bit about how the market has impacted us. Really, if you think of when you go to a lender, you have to fit within a box with regards to your credit, your employment, and assets. Right now, COVID-19 obviously has made everybody think a little bit more and tighten that box up, make it a little bit smaller. So yes, your credit score does need to be a little bit higher than it did before. Cal-HFA has increased theirs from in certain areas to 680. They still also have for their low income products 660. The Golden State Platinum program also has a 640 minimum, but again, think that the higher the credit score, the little bit better terms that you may be able to receive. As far as Guild itself, we did put an overlay to the FHA minimum credit score. We now require at least a 600 there, so no more 580s, which unfortunately bumped a few of my people around that I had pre-approved. We are now working on getting their credit score up. Debt to income ratios on some of the down payment assistance programs are getting lower. We're no longer seeing 45% of your gross income as your debt to income. So we have to now come down to about 43 on some products, and in some areas even 40%, depending on, again, the layering, the area where you're purchasing, etc. The other area where I'm really seeing a huge impact are on conventional loans, and that's the mortgage insurance. They've become very expensive because they're predicting down the road that even if we did come out of this and we're doing well and the market still maintains some stability, there is going to be some instability, and they're predicting some foreclosures down the road, which means they're going to be expensive. So we have to evaluate mortgage insurance on a conventional loan. Would it be better to go FHA to have a very flat base type of mortgage insurance to deal with? The other areas that we are starting to see issues are getting employment verifications of employment with nobody working in an office, or those who are working in an office, they're incredibly busy. Some of the folks that I deal with who are nurses and physician assistants, people who work in the hospitals or any of the first responders, getting a hold of their HR department is extremely difficult. We've learned that we can and will use verifications of employment that come directly from a supervisor, as long as it is from an email that is attached to your business. Other areas that are tightening up are manufactured homes and down payment assistance. That has pretty much gone away. Not very easy to get. If you're going to purchase or think about purchasing a manufactured home, you do need to have your down payment and your closing costs. I no longer can find some of the assistance available to kind of layer with that. And maybe Nikki Duisberg can talk about whether or not the city of Oakland will allow for that. I don't come across too many manufactured homes in the city of Oakland, but I'm sure they exist. The other area where we are working on working around the system are appraisals. If we're doing refinancing, I can find a way to get a drive-by, especially for those who may have high-risk folks in their home. Several loans that I've done that are on the refinance side, we have been able to do drive-by appraisals. And what I have seen for a lot of my clients, the values are holding. Nobody's had a significant drop in value, and knock on wood, that does not happen. Let's see, anything else? We are moving, as Emma has mentioned, into a lot of the virtual world. E-closing, meaning you can DocuSign some of your final loan documents. There will be some that you just still need to sign in front of a notary, but we can work with you on that when it comes time to close your loan, so that the majority of the stuff there that are basic disclosures that are for the final package, you can e-sign, take the pieces to a notary that you need to have notarized and be done. Minimize your exposure out in the world right now, because the last thing we want to do is have anybody get sick. I will have to reiterate, and I will strongly reiterate exactly what Emma has to say. The more you can do online with e-banking services, any kind of applications with any of the lenders that are involved with Richmond Neighborhood Housing Services, or anybody that you may be working with, to really try and maintain electronic connections with us while we're trying to reach out to everybody, voice to voice over a phone or even a Zoom meeting. Getting the information to us is really important. Meeting face to face, I can tell you a lot of loan officers are really hesitant to do so. Some will and go out and maintain, your social distancing with a mask, etc. But again, just out of safety for you as well as anybody else around you, you may want to consider making sure that you are electronic and doing things on a virtual matter. Let's see. Pretty much most of what I've gone over have been, the Guild lending, what I see with the down payment assistance programs. If anybody has any questions, I do see somebody's talking about WISH programs. Yes, I am involved with WISH under several different umbrellas throughout the Bay Area, because there's more than just the Richmond. There's also through Baja and CHDC as well. Does anybody have any other questions?
Hi, Nikki, unmute yourself.
You think I would have learned by now. Susanna, we'll put up your information so people can get in contact with you. I did want to address the WISH conversation. The WISH program is not typically sponsored by an entity, but by a member bank of the Federal Home Loan Bank. And we are an administrator, I have been administrators in the past, so very familiar with that program. If you would want more information, definitely get in contact with us. And before we hand it off to Nikki, I think Susanna brought up a good point. We too are staying very active, but doing everything remotely. So even from a counseling standpoint, working through email, working through Zoom, so we can still assist, but we are adhering to the social distancing, but we're here and available to help remotely. So thank you for that, Susanna. It does look like, do we have any more questions before we pass it off to Nikki?
Yes, so we have someone asking, please explain ratio debt to income, and are there still two important ratios?
Yes, debt to income ratio. You'll hear this a lot. It is one of those phrases that unfortunately those of us in the industry will blurt out without realizing that we haven't defined it. What that is we're going to look at your gross income as far as what you qualify for and how you can make your payment back to the lender. It's rather important that we know we're not taking all of your income. So we look at what the new housing payment is compared to your gross income. That's what's called the housing ratio. The old-fashioned way was 28%, although now it's whatever you can basically afford. And then the second one, which we call the back-end ratio, that's the one that really drives a lot of the programs. It is your absolute cap. These are your auto loans, student loans, credit cards, child support if you have to make it, alimony if you have to make it, IRS liens, a lot, for the most part, what shows up on a credit report with those exceptions, added to the new mortgage payment and then compared to your income. That's called the back end ratio or the debt to income ratio. These are things that we do look at when we're looking at how well you qualify. When you hear a lender say, well, your debt to income ratio is too high, what we're saying is you're over the program limitation, where if the program limitation says you need to be at 40%, but you're at 43%, we need to find a way either to lower the mortgage or lower your debts, or just lower the sales price. Those are the options that we have. And then what was the other question? I'm sorry.
The other question, so the second part of that question is, are there still two important ratios?
There's still both important ratios. Yes, the housing ratio on some programs will determine if you are, say, purchasing a below market unit. They don't want to have you have a ratio of 10% because then you don't really need the home. They want to see 25% of your gross income going to the housing payment. The back end ratio, as I said, will drive some of the programs. That's all of your debt with your home compared to your ratio. And they are both very important. But for the most part, you're going to really hear most of it about the debt to income ratio, your back end ratio.
And then we have two people asking about what a direct lender is, and can these programs be stacked?
A direct lender is someone who is not a bank per se. You can't come in and open a checking account with Guild. However, Guild will write the check when we go to fund your loan. We put up our money, and then what we do is oftentimes we will service your loan. We will even at times sell the loan. If we do a Cal HFA or GSFA, we will sell that loan to that investor. So we are a direct person. We're a direct entity, so we have the money and we will lend it to you directly, versus a bank, who also can be considered a direct lender in a way, but it also has many more products that go with it. They'll have insurance, they'll have checking accounts, credit accounts. You can go in and open up a checking or savings account. Or versus a broker, who is not one who's going to write the check for your mortgage when you fund. They find the other lender to do that for you. So a direct lender, if you think of it, we're the people with the money, I guess, is a very succinct way of doing that. Now, in terms of layering, layering does happen frequently, as Nikki will attest to down the road here. We'll take down payment assistance programs and we'll put 1 or 2 or 3 or 4. I think the most I've done is 7, and I almost lost all my hair doing it. It just means, can we fit a borrower into the parameters of each of those down payment assistance programs in order to get you into a home at an affordable price and an affordable payment, but also be able to explain to you properly how all of these layers get paid back. They may be silent, but they still have to be paid back.
Great. We do have another question asking, where does your money come from? Does it come from investors?
Yes, I believe it does come from investors as well as folks who pay off their loans and pay Guild back.
Cool. Great.
Well, thank you for that. Our last, but definitely not least, because Nikki, working with the City of Oakland, and many people who are in the Bay Area and live in Oakland are always interested to know what the city is doing. So we will give her just a moment while Simone gets her presentation, but a couple of things I want to leave off from Susanna's conversation: the debt to income or the housing ratio. She said something very important. They use your gross income. And if you were sitting in one of our classes, I would always ask, what do you live off of, your gross or your net? You live off of your net income. So that is also a consideration in working with you, is to understand the affordability. Can you really afford it? Because things that they don't take into consideration are, your utility bills, your grocery, your gas, and all the other things that you need to maintain your life with. So important to factor that in. Simone, are we ready with Nikki's presentation before we invite her to close out this conversation? And just note, after Nikki's presentation, we will still have questions or answers. So thank you for using the chat function. So continue to have the questions, and we can definitely have an open dialogue once Nikki is done.
Yes, Nikki, I am ready. Let me start to share your slide.
Okay.
Nikki, take it away.
All right. I'll just go ahead and start talking. How about that? All right. Thanks so much, Nikki, and the whole Richmond Neighborhood Housing team for putting this on. I think it's great to stay in touch with aspiring home buyers. because especially during shelter in place, everyone has just got all these concerns on their mind, anxieties, and it's a very natural and normal thing to still want a home. And I really encourage everyone to continue to go forward despite these challenges, which we all hope will be somewhat temporary. My background is I was a loan officer working for a direct lender and also for retail banks, both like Emma and like Susanna. And then I came to the city of Oakland, and currently I am doing homeownership programs. And here's my updates from the city of Oakland. Next slide, please. There we go. There's my name, Nikki. Okay. All right, next slide. Great. So this slide really starts getting into the meat and potatoes, and I wanted to say just a couple things before we dove right in there. For home buyers, I know there's a lot of information presented in these meetings, and some of it is a lot of technical terms. And while shelter in place has put a damper or maybe put a brake or put a bunch of question marks in the road, in a lot of ways, the fundamentals really are just staying the same though. Lenders are still looking for solid borrowers. Those are their customers. So that means you. And to prepare yourself to be in the best position to move forward when the opportunity is right, meaning you feel confident about your income being secure, you feel comfortable that whatever money you have saved and you are going to be putting forward as either down payment or closing costs, that you feel comfortable that that is an amount you can let go for that purpose, and also that you've found a home that you feel like, yes, I can manage this payment. This makes sense for me, and I feel like the condition of this home is also reasonable for my resources and what attention I can give it. Those fundamentals, while there are going to be some adjustments, maybe lenders are a little bit tighter or a little looser, maybe on the back end of this pandemic, your team will help to sort that out for you. So you're doing a great thing for yourself by getting your fundamentals ready with your education process and working with the counselors to get your credit in the best shape and your assets looking good to a bank. And those are all wonderful things that you're doing for yourself, so that when the opportunity is there, that you can make your move. So like most businesses, the city of Oakland is open for business. We are sheltering in place, of course, and working remotely. So it does present a few problems. There are still a few documents that need to get a ink signature, and that gets kind of tricky. But by and large, we're doing business pretty much like we used to. There'll be one exception that I'm going to talk about in a future slide. So if you're not thinking about Oakland, whatever city you're considering may have similar programs, and you're going to go through your lender or for your housing counselor to get that information and guide you to the cities that may have assistance, or the cities that are your target cities for where you'd really like to live, because that's kind of the bigger picture there that you want to keep in front of you. To visit a city webpage, you know, a real easy way is open your Google browser and put in city of whatever, and you could put something like homebuyers. For our page, if you Google the word City of Oakland Services for Homebuyers, it'll get you right on our web page, and that's our page right there. And you can't see the boxes very clearly on that on the screen, but those are different boxes that you could click, so for services and for programs. Next slide, please. The next slide talks about one of our two down payment assistance programs. One is called M.A.P. It stands for Mortgage Assistance Program. We currently have a little bit of funds, just a little bit left. But again, unless you're starting to purchase tonight, I wouldn't worry about that. We will get funding again in the future. Talk to your lender. They can determine what funds are available to you, because it's all income driven. So they need to assess your current household income to figure out what's the right program for you, and will it work with the documentation and so forth that you currently have. And you are, of course, welcome to visit our webpage. Click on where that arrow is. It'll show you the brochure, and you can read the details of our program or just scroll down the page. Next slide, please. One of our other companion programs is called CalHome. This one serves a different income range. And again, you can click the links to look at the details on our brochure, or just talk to your lender or your housing counselor, and they can walk you through that and help you assess if you are likely eligible to be able to receive that assistance. The benefits of down payment assistance, like Susanna mentioned, layered programs. If you can get one big fat chunk of down payment assistance, sometimes that can make it easier than getting a bunch of little ones, but each case is very different, and you want to talk with your lender to understand what are the advantages of one versus another. For example, Wish is awesome because after 5 years, you don't need to pay it back, and that's like the best. The city of Oakland will want the money back, so we'll give you 30 years, but at the end we'll want it back. So you can talk about those details with your lender and make sure that you understand the loan programs, and so that you're making an informed decisions about what's the best way to go forward. Next slide, please. I wanted to let you know that one of the challenges out there is finding affordable housing. The city currently has a below market rate. We sometimes call that BMR. Homes available. They're brand new, single family residences built on a vacant lot. They're also called affordable housing. They're also called deed restricted housing. There's a lot of different words for it. And like all affordable housing, it's built to be affordable to a specific income range. So some housing is built for very low income, some is built for low income. This particular batch is for what we call moderate income. So somewhere around middle income to slightly over middle income. And many working families fit into this category. Just as an example that I have here on the screen. For example, a household of 5 people earning $160,000 a year, they would qualify income-wise to purchase a 4-bedroom home. So it's not $160,000. It sounds like a lot of money to me, but many times when we see, let's say, a working couple, their income can easily approach that. And if one person makes $80,000 and the other person makes $75,000, hopefully the other 3 people are kids with no income, and they can still qualify to purchase this house. These homes are priced in the 400s for the 3 bedrooms, in 500s for the 4 bedrooms. They're around scattered sites in Oakland. And if you want to learn a little more about it, by all means, visit our webpage and click on some of those links. Those are the ones with the colored words, and it has an underline on it. They really are beautiful homes. And just briefly, what deed restricted means is that when you go to sell it in the future, the sale price will be limited by that deed because you will need to sell to another home buyer that's in the same income range, whatever that is in the future. So maybe 10 years in the future or 20 years in the future, you'll need to sell to a home buyer family that's in about the same income range, and we'll help you figure out, we'll run the calculations to determine what that is. And next slide, please. There's an example just to show you that, yes, that's what one of the homes looks like. I hopped on my bicycle. That one's actually kind of close to downtown. And those are the 4-bedroom homes. So some are in West Oakland, some are in East Oakland. There's actually a few in Central Oakland. We have 3 different developers, and they each have a different building style. One has garages, the other ones have parking pads, some are 2 stories, some are 1 level. So there's a little bit of everything in there. And if that's of interest to you to buy a brand new home, by all means, visit the website and talk to your team to see if that's for you. And next slide, please. All right, so here's the one thing that we're not doing, and it's homebuyer education. Normally, I do a monthly homebuyer education workshop, and the city accepts that as meeting the education requirement to receive either a assistance or to purchase a BMR. But lucky for you, there are wonderful alternatives. One of them is just the regular. It's probably something you already know about, is that you can contact Richmond Neighborhood Housing Services and say, I'd like to do the homebuyer education, and they will help you from there. There are other agencies similar to RNHS that can help you if you happen to be in a different area or want to use the one down the street for some reason. And during this S.I.P period, we have expanded our program to also allow fully online certificates in homebuyer education. And those you see on the screen there from eHome America and from Framework Home Ownership. So they do not have a local shop or office, if you will. And we all suggest that you talk with your lender so that you can select the best choice for you. But when I take the call, I always tell people, hey, if you want something inexpensive and you want to come check it out, come to the city's workshop. We really go over everything, but the certificate won't be good for other things. You really do yourself a favor by working with one of the housing counseling agencies, because they can bring so much more to the table to assist you, whether it's your credit, saving up for that down payment, or directing you to programs and lenders that can assist you if you have some special things about your criteria that need special handling. And they're there for you later when you actually move in, if you're having challenges or lost some income, or you're thinking about refinancing, or your mortgage statement is somehow bungled up and you can't reach your lender. So we strongly encourage you to consider that. And I know that Nikki's team will be making sure that during the shelter-in-place period that they have non-touch options so that you can get the education that you need to meet those loan requirements, so you can go ahead forward and start making offers as soon as you feel like you are ready. And next slide, please. There's one of these awesome awesome housing counseling agencies, Richmond Neighborhood Housing. So we did a partnership live seminar with them last fall, and we packed that room, and Nikki's team is just absolutely outstanding. What else can I say about you guys? I had to show your cute flyer. And next slide, please. All right, thank you for joining us today. I hope everyone has an awesome home buying experience, and I think anyone on this panel today would be happy to answer questions, and of course I'll be happy to answer some questions now if there are any.
So Simone, do you see any questions for Nikki?
Yes, and I'm gonna go back to, I'm sorry, you had a slide that had your contact, this slide. Because someone asked about your contact information, so I just wanted to get it back on the screen. But yes, questions. Someone has asked if you foresee any changes in these programs, and where does the city get the money to fund these programs?
Right now, I don't see any changes to the programs. I mean, nothing major. Like, we've made little nips and tucks. Like, I'm accepting let's say DocuSigned documents right now, but certain ones, when you get in front of that notary, we're going to say, hey, we need your ink signature, and we'll just capture it at the end. So little things like that that don't really change the fundamentals of anything. We don't have any consideration of changing our ratio requirements or anything like that at this moment. We will be expanding our maximum Cal Home loan, but that's only because the state already expanded their Cal Home loan limit. So again, nothing earth shattering. I think all in all, our requirements are going to be about the same. The city gets its money from city funds. So it's a little bit complicated, but part of it comes from grants that we get from the state. And then when people pay that money back, we have that money again to lend out to more home buyers, and other comes in as it's called a tax increment. It's a little bit complicated, but we get some funds from the city to loan out. And while it's loaned out, we're not usually getting a payment because it's called a silent loan. You don't need to make payments. But when people go to sell, which is often in the 7 to 10 year range or the 30-year range, it seems to be one or the other. When they go to sell, then we get our money back either with interest or appreciation, and then we can make more loans from those as well.
Next question. Can you go over the 3 programs again? It looks like you mentioned 2, but you might have talked about 3.
Okay, yeah. The first one is M.A.P, M.A.P. The second one is Cal Home, and the third one is the BMR project called, I don't think I mentioned the name, it's called Oaktown Roots. So that we call that an affordable housing program or project. And for that, you do not need to use one of our participating lenders. You can use the preferred lenders that we have on our website, or you can use any lender that can issue a BMR loan, a loan that has a deed restricted property.
And are these programs only for the city of Oakland?
They are. So again, other cities may have similar things. That's all I can say for that, but the Oakland programs are just for Oakland.
So someone is asking, is Oakland honoring certificates and programs? Not for sure do you understand that question? I don't know if you need a better explanation.
Homebuyer education certificates, we are honoring those if they meet the requirements of the program. So if it's from a HUD certified housing counseling agency, whether that agency is in the Bay Area or whether you got it in Kentucky when you used to live there, those are nationwide. So that is what we are accepting. We will accept them up to 2 years old at the time that you apply to purchase the home. And if you don't have a certificate yet, get in touch with one of the housing counseling agencies, or we will accept 2 purely online ones called eHome America and Framework. And I do realize that some of our local agencies also have a connection. So maybe Nikki or your team can explain a little bit more about that, because I think it's a nice blend that can meet multiple program requirements without you having to take one workshop and then another workshop and then another workshop. So again, your housing counselors are the experts on that, and I would definitely listen to what they have to tell you about that.
Okay. Another question, can you explain area median income, 100% and 80%, and how can someone find out their area median income?
Yes, I'll explain it in a general sense, because it, AMI, sorry for not explaining that in more detail. It stands for area median income, and the numbers are usually county by county. So when the census gets done, they take that information about how much income and how many people are in each home, and they start generating some general data for that. And obviously, let's say Alameda County, where Oakland is located, or Contra Costa, where Richmond is, our average income is a bit lower than, let's say, the very expensive San Francisco County. So our numbers are going to be a whole different set of numbers versus if you're purchasing in San Francisco County, whichever county, Solano County, they're all slightly different. So the best way to find out about that, you can go to my website, and we have a link on there that where you can click through to this highly numbery looking table, which isn't that fun. But I would say go to our M.A.P program page and click on the brochure. And there's a nice little grid in there that tells you what our current income limits are. There you go. If you just click right where that arrow is, you can download our brochure, and it's really easy to read the income tables on there. But best to talk to your lender or housing counselor, because the fact is, you guys might not know as the consumer, what do they count? What income do they count? What income doesn't count? Is it for my whole household? Is it just for the borrower? And that will actually change from program to program. And it also depends sometimes on what area you're in, how they are applied. So let your lender sort all that stuff out for you. That's my advice, so that you don't get too much numbers in the head.
True. And then the last one I have is, do you have to currently live in Oakland to qualify for the Oakland programs?
You do not. The city program M.A.P does require that that an adult in your household, so it doesn't have to be you, doesn't have to be the borrowers even, but some adult has to either live or work or go to school or be a returning displacee. It's kind of technical, but I'll be happy to get into more details as necessary. We currently don't have that requirement at all for our Cal Home assistance. That may change, but as of now, that is not the case. In our BMR program, this program, oddly enough, it has no requirements at all. You can be coming in from Tanzania, which has nothing to do with Oakland right now, but we're like, hey, come on over here. We got this BMR for you. We want you to be a part of our community, and we got these homes built and ready to go. So come make it home and make our community more beautiful.
I'm sorry, some more questions have come up. Is there an income limit to qualify for the WISH program?
That one's probably for Susanna or Emma. Those are the WISH experts over here. I think there is.
Yeah, it would be the 80% area median income. And the other requirement for WISH is it is a matching program. For every $1 you put in, they match 4 up to your $5,500, and then they match $22,000. But it is a low income at 80% of the area median for wherever you are purchasing.
And then, I'm sorry, one more question for Nikki. I think this one would be best for you. Do you anticipate BMR homes to be made available for 1 to 2 people? The homes that you provided, seeing these homes are for larger families.
Right now, I do not anticipate it. The challenge we have in the Bay Area that everybody has noticed is it's very expensive here. And part of the reason for that is it's very difficult to build, and land costs are high. So this particular project, the only reason and only way we could do it was the way we have done it. And there is really a need to house the families of Oakland, the working families, whether it's teachers, nurses, bus drivers, everybody's, people have family. I will say right now, we are seeing a lot of what I would call multi-generational families, where let's say someone in distress in another state is now coming to join their relative. We're not going to tell you who your family is, but you need to be able to tell your loan officer, and make the point if you're purchasing, let's say, maybe with another couple, and now you have 4 people. So talk to your lender about how your scenario might or might not fit into the guidelines, and they can probably go to the salient points and do some discussion with you to find out if there's something there that might be a solution for you.
Great. So I'm going to give everyone time to kind of think through and see if there's any last minute questions, because it was a lot of great information, but I do want to circle back on some of the comments. So at our organization, we do offer eHome America, which is an online certification program that Nikki mentioned. What we are offering, because typically there is a cost. So if you're in contract needing to close and you're not able to get to a class because of shelter in place, we are waiving that fee to help assist with the lending process. But we also are going to be in the month of June, every Thursday in June from 4 to 6, doing the 8-hour certification class that you'll be able to attend virtually. And by finishing out those 4 classes, we'll get you your certificate. The city of Oakland is very generous in the length of time that they allow it certificate to expire, because typically lenders will only accept that certificate for a year. And the reason I bring that up is for our Lender Ready program, if you took a class in June, you know, the way the year is going, it'll be June 2021 before you know it. But if you stay actively involved with our counselor, staying engaged, Nai's been mentioned a couple of times, and she is our counselor, we can hold that certificate and make it live by printing it when you're ready. So I wanted to make that point. Also, in dealing with the AMI levels, a couple of things that were mentioned that I think is really important is understanding if it is based on household size or just income, because that could be a differentiator in many of these programs. And also, not every lender accepts every program. Fortunately, tonight with Guild and Bank of the West, everything that Nikki mentioned, they do accept those programs. So as you are out either working with us or out on your own, learning about all these different things, definitely would ask that you contact us to make sure that the programs you have found to support you in your home buyer down payment will match with the lender, because not every lender, as I said, accept the program. And the last thing I wanted to validate with Nikki's comment about the BMRs, we currently are building in West Oakland a 7-unit first-time home buyer homeownership project. And based on different funding sources and capital stacks of being able to build these homes, we're also very sensitive to the AMI levels. So to the point that Nikki mentioned, this is the time to get really creative of how you get ownership. Because remember, as a first-time home buyer, your first home isn't typically your last home. You typically will move out of that home in the first 5 to 7 years. So what we always tell the folks that we deal with, get in where you fit in. So it may not have been your ideal situation where it's just you and your partner, spouse, or whomever. It may be a family. You get your house, you know, build, and then the next person can get their house. So however creative you need to do to get these programs, I think is going to be extremely important during this time, to be open to all of the different possibilities. Because prior to COVID, you could be somewhat, you know, somewhat specific about how you wanted to do it. But I think post-COVID, we're going to all have to get real creative to make the things happen that we want to happen. So with that, are there any other questions for our esteemed panelists that you would like to get answered? And while we are waiting for last minute questions, I'm going to ask either Simone or Keisha to send the link for our survey, because it is important for us to understand what you felt about today's session. And then also let us know if this is a good time. I know that we're under shelter in place, so there may be a little flexibility, but if there's better times you think that these sessions can go on, let us know. And then also to let you know, next week, May 14th, we're going to be doing Money Matters, talking about the financial planning and legacy, having a trust attorney, Lauren Peoples, on to talk about how you may be thinking differently about your legacy planning. Jason Matthews speaking about retirement planning, Siobhan Wright talking about life insurance, and Lazinia from State Farm talking about just property casualty insurance, because we know all these things are being impacted because of COVID and things we hadn't had to think about before. So it looks like the Survey Monkey has been sent to you via the chat function. We're getting some great thumbs up saying that folks have enjoyed the presentation. For the person who asked, it looks like the housing opportunities in Richmond, San Pablo, Pinole, either contact our organization or Susanna. I think she'd be very familiar with what programs exist. And with that, a friendly reminder, this has been recorded. The presentations that were provided today will be offered to you as well. We want to thank you for spending the evening with us, and hopefully we'll see you back again next week. Thank you, guys.
Thank you.
Thank you.
Oh, shit.